Hey everyone, welcome back to the weekly market recap. Today we're breaking down what happened in the markets for the week ending July 4th, 2025. We've got fresh highs in the stock market, some surprising job numbers, and key headlines you do not want to miss. Whether you're new to investing or just want to stay updated, I'll make it simple and clear. I'm Tyler, the Public Relations Manager of the RMHS Investing Club.
I'm Aiden, a co-founder of RMHS Investing Club.
I'm Ted, another co-founder of RMHS Investing Club.
And I'm Luke Rogerson. I'm the club's photographer, and together we make up the RMHS Investment Club.
Let's start with the biggest headline of the week. The stock market kept climbing. The S&P 500 and the Nasdaq both hit all new time highs, showing just how strong investor confidence still is, especially in big tech and AI-driven sectors. The Nasdaq has been riding momentum from companies like Nvidia and Apple. Nvidia specifically is close to reaching a market cap value of $4 trillion. The Dow Jones wasn't far behind either, ending the week just 0.4% below its own record. That's important because it shows this trend has been applied to a more broad variety of companies rather than being confined to a more tech-focused group of companies. Overall, the markets were up about 2% this week, even with one less day of trading due to the July 4th holiday. The bottom line is, this week showed continued market strength even with global uncertainty and speculation.
One of the biggest drivers behind this week's rally was the June jobs report, and it came in stronger than expected. 147,000 new jobs were added last month, beating the forecast of about 117,000. This is great news and it shows the U.S. labor market is still holding up, despite higher interest rates and the global uncertainty surrounding the Israel and Iran conflict. Unemployment also ticked down to 4.1%, which might not seem like much, but it signals the continued strength in the economy, especially after months of worries about a slowdown. So, what does this mean for the market? Strong job growth means that people are working, spending, and keeping the economy moving, which investors love. That's why we saw stocks surge on Thursday. It gave people more confidence that the economy isn't falling. But there's a flip side. A strong labor market could delay Fed rate cuts because the economy might not need as much stimulus. So investors are watching closely to see how the Fed reacts next.
Now let's dive into some other headlines that moved the market this week, starting with DC. First up, Congress narrowly passed Trump's administration's new budget. The Senate was split 50 to 50, and the Vice President, J.D. Vance, had to cast the tie-breaking vote. The bill includes new domestic spending and tax changes, which could help the economy, but it also raises concerns about the growing national debt. One of the biggest concerns about the bill include reduced spending on Medicaid. Investors are watching the markets closely to see what this means long term, as its potential to move the market. Next, bond yields increased after a strong jobs report. When the job numbers are stronger than what people thought, it means the Federal Reserve might wait longer before lowering interest rates. This made bond investors nervous, especially for short-term bonds. So the 2-year Treasury yield went up a lot because investors changed their expectations. Now let's talk about the US dollar. Even though the dollar strengthened slightly after the jobs report, it's still near its lowest level in 3 years. This matters because the weak dollar can make the imports more expensive, which might increase inflation. On the other hand, it helps US exports stay competitive in global markets. And finally, small caps made a comeback. The Russell 2000 index was up over 3% this week, outperforming large cap names. That's usually a sign that investors are feeling more confident about the US economy. Small cap stocks tend to do well when domestic growth picks up. So overall, these headlines give us some insight into how politics, bonds, currencies, and smaller companies are all reacting to the bigger picture in the market.
All right. Let's take a look at the week ahead. We'll walk through the most important scheduled data releases from Monday through Friday. Starting with Monday. Monday is a quiet day with no major economic reports scheduled. Although it's quiet, Monday will offer markets and analysts a chance to reassess recent trends and position ahead of a very active midweek. On Tuesday, we get the Small Business Optimism Index from the NFIB. This index gives us a ground level view of the economy, tracking how small businesses are feeling about hiring, inflation, and future sales. It's a critical early week indicator, especially as small businesses face continued pressure from wage growth. During this, markets will also be looking ahead to upcoming inflation data. Though not released on Tuesday, anticipation will be building for the Consumer Price Index and related reports expected later in the week. Also on Tuesday, we'll see the Consumer Credit Report from the Federal Reserve, which breaks down household borrowing. And depending on the schedule, Consumer Price Index data may begin to roll in, giving us our first hard look at how prices moved in June. Now moving to Wednesday, which is one of the most important days of the week, we will first get the minutes from the June 17th through 18th Federal Reserve meeting. These minutes offer a detailed look inside the Fed's thinking. For example, it will offer a look on how policymakers viewed inflation trends, the labor market, and future interest rate paths. We will also get the wholesale inventory report from the U.S. Census Bureau, which gives us insight into supply chains and demand forecasts. Thursday keeps momentum going. We'll start with the weekly jobless claims from the Department of Labor, a timely and closely watched measure of the labor market. A rise in claims could point to weakening job conditions, while persistently low numbers would suggest continued resilience in hiring. On Friday, attention turns to fiscal policy with the release of the federal budget statement from the Treasury Department. This monthly report lays out government spending, revenue, and resulting deficit or surplus. At a time when debt levels are rising and policy debates are heating up, this release provides critical context for future budgetary decisions and market confidence. We may also see any final inflation readings on Friday, such as the core CPI or PCE deflator, rounding out a week heavily centered around prices and policy. And that concludes our outlook for the upcoming week.
If you guys want to learn more about investing or personal finance as a teen, you guys can visit our website, armatjestinvestingclub.com. And we also have a TikTok and Instagram listed on the screen. And just remember to take control of your finances while you're still young. It's the best time to invest and save. And with that being said, this is Aiden, Ted, Tyler, and Luke signing off on behalf of Armat Jest Investing Club.